Okay, very good morning. Tuesday, 24th of April. Hope everyone is well. Just give you an overview of what we're going to cover. A couple of earnings reports to get through. As you've probably seen on the screens already this morning, the DAX up at around session highs. One of the bigger DAX components reporting this morning, SAP, with some positive numbers. Other things to have a look at. A bit of a ongoing reversal, if you like, of the Trump tactic on Russia, which is causing a bit of movement in specific commodity markets, which is quite interesting as well from the political point of view. Certainly from a tactical point from the Trump strategy of negotiation. Have a quick look at Australia. The Aussie, seeing a little bit of movement overnight following some inflation numbers. Also got a vote that happened last night in the Senate in regards to Mike Pompeo, so we'll have a look at that and what it means, and then we'll have a look at the calendar for the day ahead, and then I'll hand you over to Sam as per usual, and he'll talk you through kind of the charts in more detail. I'll focus on the news as per usual, and one of the things is it's fairly quiet market open. There's nothing major that's occurred from overnight in terms of the close on Wall Street. It's kind of flat to slight negative, touch underperformance seen in the Nasdaq. But if we look over to the scoreboard of the major global indices, as you can see, Asia put in a slightly better performance. Again, nothing really too major coming out. A few commentaries about China's management of their economy from the government's point of view and so on overnight, but nothing single catalyst. But the Shanghai Comp up about 2%, Hang Seng pretty decent gains, Nikkei, ASX, Australia, so on, all higher. So despite a fairly flat finish in the US, slight positivity seen overnight. And as you can see, in terms of the DAX, if I was just to click on there and have a look at some of the movers, you can see SAP, which is one of obviously the largest companies within the German stock index. They reported their corporate earnings a few hours ago. They're up about 3.5%. Fresenius Medical Care up about 4%. So some good earnings reports helping bolster sentiment. In terms of SAP specifically, just quickly to show you that, the company announced upbeat results through seasonally tough first quarter, gaining ground on its main competitors, of course, which is chiefly Oracle, but also nowadays Salesforce in their cloud technology divisions, and that its margin recovery firmly on track. So some good news there helping bolster the stock index. The other big company, of course, from the US that reported after market close last night was Google. Just to give you a few of the highlights, not going to dwell on this too much because overall after market Google shares were largely unmoved. But in summary, strong growth in ad sales were not enough to offset a surge in costs at Alphabet that shrunk their first quarter operating margin essentially. A couple of numbers to be aware of for Alphabet there. Operating margin of 22% was down from 27% a year ago, and missed expectations because of a growth in expenses. But their worldwide sales, when you talk about Alphabet's numbers in the actual value terms, they're pretty phenomenal. Alphabet's sales in the quarter, $31.1 billion. And that was above analyst expectations of about 30.3. One of the interesting things that analysts were responding quite positively to with the read across with their numbers is that the ad sales showed investors that there was no immediate signs that rising global privacy concerns have affected the company's profits. Obviously, this is something which had weighed on sentiment on the tech sector all the way going back to Cambridge Analytica and the scandal that came out regarding Facebook. That did have an impact on potential regulatory response that could be forthcoming, but evidently that not playing true in the immediate effect in the numbers for Google. The other thing is as well that generally strong advertising, a reflection then of a strong economy from a corporate level, willingness to spend and so on in that environment was seen as a positive, but overall fairly muted impact, I would say. One of the things I do want to have a quick look at is Trump, and you guessed it, another reversal in policy. So the Trump administration has signalled late yesterday that it could ease sanctions against Russian aluminium producer Rusal that have sent global metal prices skyrocketing, sparking a relief sell-off on Monday that saw aluminium fall as much as 10%. This was yesterday. So if you remember, so the steel tariffs, but then the Syrian strike, the targeted kind of sanctioning on individual Russians and specifically Rusal, which is one of the biggest aluminium players globally in the world, and their shares got hit significantly about a week or so ago, to the point of which I believe the Russian government had to step in to kind of almost facilitate the functioning of the company, given it is so large and obviously employs a lot of people. It's imperative to the functioning of the economy as well, given such a large employer. But Trump's reversed this. Now what's interesting, of course, is that if things like tariffs, and particularly targeted sanctioning on a specific commodity producer, one of the largest in the form of Rusal in Russia, then what happens to aluminium? Well, aluminium skyrockets. But then who's the biggest importer of aluminium on the planet? Well, you guessed it, it's the US. They import the largest amount. I think Germany's the second. And this isn't just an aluminium story, but other things as well. So in effect, by doing this, what's happening is that prices of commodities are rallying. That's making it more expensive for the US to buy these goods. And by default, that means that inflationary pressures might rise, i.e. with oil and these commodities rallying, price pressures will pick up because the cost of these components to make goods goes up. So prices rise, inflation comes. What does the central bank do? They have to raise rates more aggressively. And what does that mean for Donald Trump's all-time high equity market? Well, that's what the pressure is. When you start seeing the big corrections that we've had at the beginning of February, this kind of nervousness that we've had really from Friday and Monday about this renewed focus on policy tightening, Trump knows full well what this all means. So again, it's almost a classic art of the deal Trump move, where he comes in really heavy-handed, and it's only been literally 7 days, and he's come out and he said, do you know what, actually we'll reverse those sanctions, we'll ease them, we've made our point, everyone now in the heartland of America is really happy with me for taking a very strong stance against the Russians, strong stance against the Chinese, but in the end, much like the trade situation with China, this Russian one has dissipated very quickly. So it's just quite interesting to see, and to give you a bit of an idea of what this looks like in the price of aluminium futures. This is when the tariffs first came about. So we're talking at the beginning of, let's say, April, when the talk was around about the steel and aluminium tariffs. Trump was really talking it up. And then the Russian situation obviously flared up about a week ago. That was when aluminium hit that peak you can see here. But look, we've reversed almost 50% of the move already. So, some really interesting read across, I think, into the strategy, which I think Donald Trump typically likes to deploy for, I guess, political gain. But obviously he's playing a fairly high level game in that respect, because if it doesn't go well, if let's say with the trade wars, as we were talking about 3 weeks ago, if Europe, single market, if China, these big players in the trade space start to retaliate, this could be devastating, not just for him but for the global economy. But it looks like, as we were discussing here yesterday, everything has kind of started to de-escalate quite substantially. And so following on from the kind of Chinese focus, Russia's also following suit. What does this mean then for the dollar? Well, it's a little bit firmer still this morning. Excuse me, that was the aluminium price. Sorry if I wasn't sharing my screen. This is what aluminium looked like. So that was the rise that I was just referring to. This is the pullback that we've had. Looking at the charts this morning, the dollar a little bit firmer, obviously rallied fairly aggressively yesterday, but it is basically flat at the moment, up about 1/10. Let's hold on to the gains from yesterday. So still worth keeping an eye on these major pairs. I'll leave Sam to look at this more technically. Obviously cable immediately looks quite interesting, just given a bit of a retest here of the Asia Pac lows that you can see around at 139.51. So continued reversal that we're seeing in cable. Couple of murmurs on Twitter about talk that Mark Carney was speaking at a dinner or that he will be speaking at a dinner tonight. Don't know of any details about that. Of course, as we go through the session, if I hear of any more on that, I will of course let you know. If that does turn out to be true, that wouldn't surprise me at all, because if you think about the market's kind of lack of transparency, and if anything, more confusion because of the dovishness of his comments that he made yesterday when everyone was expecting a May hike, this kind of made May a little bit more of a toss-up whether or not they're going to make an immediate interest rate move, then it wouldn't be surprising to have Carney come out, speak at a dinner tonight. That'll get press coverage in the press tomorrow, and will hopefully try to rebalance then the communication and guidance as to what the May situation will be, given that meeting is really not that far away now. So I'd say this is kind of classic communication from the Bank of England, if that is to be the case. Okay, a few other things to be aware of overnight. You might be looking at the Aussie, which has generally tracked lower, a little bit of a blip in price movement overnight. It is off those lows, but flat to just, again, holding on to the losses that were seen predominantly from yesterday. But to be aware of, hovering near the 4-month low, the inflation data out of Australia from overnight was just a slight miss. I think it was 0.1 on both the month-to-month and the year-on-year. First quarter inflation figures then slightly shy of estimates, with economists maintaining the view that the central bank will continue to hold interest rates for the time being. So you can see this is a gradual trend that certainly has been in play pretty much since the mid-part of January, from the beginning of the year. A few other things. This isn't really a market mover, but it definitely is kind of a gradual shift, I think, as to where this story is heading, because one of the Brexit backers, Liam Fox, offers an argument for keeping the customs union. And as you all know, this is obviously the opposite of the current Conservative Party stance, which has been, for the entirety of the last year, a complete removal of the customs union. That's what's been promised by Theresa May. Now, the economic argument would be more compelling that, for the time being at least, to remain part of the customs union, at least to have more time to negotiate the trade part of the deal, certainly now that we've secured a transition to the end of 2020. But the important thing here is that the more of these Brexiteers that start to go against the PM kind of puts her in quite a tricky position, because Liam Fox obviously is in charge of international trade, so I don't think it's too surprising to hear him flipping, but he is an ardent backer of Brexit. But obviously we've had the House of Lords vote against the government in terms of keeping in the customs union. If you get more and more people jump ship and the Prime Minister changes stance, then obviously that could be enough to trigger a vote of no confidence then in those that were very adamant that she's kind of broken the promise by going against the will of what the people have voted for. And so definitely something I think that's worth monitoring. Is it something that would warrant taking a trading decision on this news alone? I think not, but certainly something to be aware of. The other thing, of course, and this is something briefly mentioned in the kind of introduction, this is to do with a divided Senate Foreign Relations, let me just switch over screens, committee voted in favour last night of Mike Pompeo to be the next Secretary of State. This is definitely a positive for Donald Trump in that respect. For some of you guys who aren't familiar with this chap, Democrats have said that they're concerned about Pompeo's perceived hawkishness, as well as comments that he's made in the past that were critical of Muslims and gays. He's also got a preference for military action before exhausting diplomacy. Some of the critics expressed concern that Pompeo would embolden what they see as Trump's impulsive tendencies rather than to moderate them. You know, if you remember when Rex Tillerson was fired or pushed aside in that sense, the market reacted in immediate fashion quite negatively, because he was seen as kind of, now that Gary Cohn had already left, then Rex Tillerson was the last point of real diplomacy, a more even-handed approach, particularly on the pressing issue of foreign policy. And after he's gone, well, then there's really no one left to keep Trump in check. And I guess what people are a little bit concerned about is someone who's a little bit more hawkish-minded, kind of fits into the Trump narrative a little bit. And obviously this is a person who's going to be a key advisor for issues like North Korea, for the ongoing, quite pressing one at the moment, which is the Iranian nuclear deal, the situation with the Russians and Syria, so on and so forth. So it is quite an influential role, certainly, given the emphasis on geopolitics over the last kind of 7 to 10 days. With that being said, so that's something definitely to be aware of, which would potentially make you, if you needed another reason to be a little bit more bullish crude oil, and certainly this could play into that way of thinking. The other thing, of course, is the initial estimates have started to come out for the weekly oil inventories that we're going to get, obviously regular midweek. Analysts surveyed by S&P Platts, who are kind of the benchmark service for the oil industry, they've said their expectations are for a fall of 1.1 million barrels of US crude oil stocks for the week ended April 20th. For the same week, over an average of a 2013-17 period, inventories had risen roughly a million. So against the average, this is quite a bit lower, more of aggressive drawdown. So this, in combination with kind of our general views, I guess, of oil, where you've got the ongoing commitment of OPEC to continue cutting, talk of this going on, rolling over well into 2019, the geopolitics heating up with tensions between Iran and Saudi, now with Mike Pompeo potentially coming in, shaking things up from a more hawkish perspective to play into Trump's hand of being more, again, protectionist in that respect. The rebalancing of the market, diminishing of the oversupply nature of the crude market, just keeps us more bullish still. Crude, I think. And we continue to see that pretty strong rally yesterday. You've obviously got these disruptions that have been taking place in Libya as well at the weekend. And so we found a bit of a floor around the $69 handle just above there. You can see we rallied to that point last night, and then we broke it pretty much when Europe's come in, found a bit of support before moving higher again. And obviously in the long-term play, this has been the bigger target of the $70 handle, which kind of looked almost inevitable, having broke that key technical level around 66.5 that we got through at really the third major test about 15 days ago or so. So definitely I'll leave Sam to give his thoughts on that, how to play it from a more intraday perspective. But irrespective of the fact that US rigs continue to go up, US output continued, or will, from a perception of investors' point of view, continue to rise, I think that's still being outweighed by a number of the more bullish factors at the moment. Okay, quick look at the calendar. Major thing for this morning, and I'll try and wrap this up quickly because you've got German IFO coming out in just under 10 minutes. However, I don't think German IFO is really going to be a major game changer this morning. I don't think it's going to be a situation of hitting at market to trade a European asset on the back of this data, because generally speaking, the numbers have been pretty strong. The headline's expected to drop from 114 to 102, but I mean, let's just have a look at the general figures. I mean, it's been on a gradual decrease overall. The lowest reading last time was since last April. Forget a 102 print. I mean, that does drop us back down pretty low actually, down to around the lowest level since 2014, but still relatively within this range of data. I guess if we get a number sub 100, that would definitely raise eyebrows. Then that opportunity might be a little bit different and you might get a bit more of an immediate response in the market. The bottom end of the range for the headline is 101. So if we broke 101, and i.e. that's the low of 2012, and it breaches 100, that would put us down at the headline lowest reading since 2010, then you might get a little bit of response in the euro to the downside in that respect. Otherwise, UK data, so net borrowing figures coming out at 9:30, Again, not the most major data, but certainly something to monitor. I guess IFO is probably more pressing in the near term. And then this afternoon, some housing data out of the US, nothing too significant that side, but US consumer confidence worth monitoring at 3 p.m. alongside new home sales. Speakers, nothing really too much during our session I think you need to be mindful of. But you do have quite a few corporate earnings coming out, and quite a few of these would be pre-market. The one I suggest you take particular interest in if you're looking at index futures is Caterpillar. I think Caterpillar normally come out at around 12:30, so this is pre-market, pre-US Open, and they tend to be a significant bellwether for the read across for the kind of perception of health of the global economy, because you also get the geographic breakdowns as well. So Caterpillar's definitely a key one I'd be looking out for in pre-market. All right, let me hand you over to Sam, and you can look at some of the charts and deliver you IFO as well when it comes out.
Hi guys, good morning. Yeah, we'll have a quick look over the pound to begin with. It's just touched not too long ago the low of the day, which we've found good support on. Well, it looks like quite a few times this morning, so I'll be keeping an eye on that on the futures. 139.51, just lower that time frame down just to have a quick look just how well that level has been respected. Yeah, so we just had a bit of a push there. Found good support, bit of profit taking as well. You've got to imagine on the previous low. If the pound was to continue this trend, which really has been going on since what we got here, the 17th, and it's been down day after down day, the low keep being broken from the previous day. Each day you can see it does get broken. I think, you know, if we can get a push through the new low, obviously that offers a good level of resistance, perhaps for the push down to the S1. If you wanted to be a bit more conservative, the pivot still doesn't look too bad. You've also got 140 around there as well. All these previous levels of support turn resistance I think would be pretty interesting. Higher the day, not too bad as well. For this trend to continue would be the way I'd really be looking at this. For the euro as well, where we've continued to push down, didn't quite make the low this morning. Same sort of bias in that, looking for the trend of this dollar strength to continue. The dollar index still not far off its high from yesterday. The key level, I think, around that pivot, you've got quite a good area of what was support before we broke through resistance. So to be expecting a good level of resistance if we were to get a test up there. Again, looking at that low to see if we can get a push through to today's S1. Lowest level will be quite some time, as you can see here on this longer term chart. I have to put it on an even longer time frame to see the last time we were here. And you can see we're coming back down, not far away, you know, really from the level that we saw in the back end of March. If we have a day like we had yesterday, we wouldn't be far off from there. So just keeping an eye, I think, for the dollar pairs, if we can get some continued strength for the pound and euro. S1 still not out of the question to happen relatively soon. Obviously got the data in just under 5 minutes. For Aussie dollar, I like the look of the pivot and the previous low of the day if we do push up. However, obviously that does seem quite far away. The higher the day, we've had good resistance. Again, preferring the downside for this market rather than looking to sort of counter trend as such. I think more appetite is coming every time we perhaps push to a new low and then come back to retrace. So I bear that in mind for this market. Dollar yen pushing higher, actually not far away from that high. R1 quite a decent target to the upside, and again this market is one where we haven't been around this level for quite some time. You can see the last time was actually when we started coming back down for equity markets in the February. So obviously with equities coming down quite heavily, the yen as the safe haven play was supported there. So for this dollar yen, I think key level to the upside obviously being the R1, and then those levels from early Feb. To the downside, any of these sort of lows I think worth keeping an eye on for potential support. We'll be keeping an eye on equity markets as well though. As we're just having a look here, you can see the S&P just touching that high, so I'll be looking for this trade to ideally push on, maybe a retest back. Same for the Dow Jones, not far away from the high, and the Nasdaq there you go, just pushing to that high there. The pivot has offered a good level of support. If it came down again, I wouldn't be too sure, but I think I would be looking, if long and no one of you are in this in-house, good target being the high that we had late yesterday for that contract. Push above, and we could see here on the Nasdaq anyway, really key level of resistance using the low from the 20th of the morning and the high from yesterday, not far away from the R1. Similar area in the S&P that you can see these previous lows and highs, quite key level of price action that you would really want to see us get through. This sort of uptrend for today was to continue, and the Dow Jones as well, so that you'd expect some decent price action if we were to get there. But for now, shorter term levels using the highs of yesterday or the highs of yesterday afternoon for the Dow Jones in particular. Having a look at gold, which of course came under quite heavy pressure yesterday with the strength of the dollar. I think I would still prefer the downside, albeit from a bit higher up, perhaps yesterday's early morning's lows as that opportunity there, as we have found pretty good support from the early part of this month. So I prefer a bit of a retrace to continue that. I think if we came back to the high of the day, the pivot is not the worst idea in the world, but I would just be mindful that the stop you would really want to be above probably the afternoon high or sort of midday high from yesterday. So I sort of separate it with the key levels looking at like this in terms of those longer trades to look to hold. Could of course have this trend line on, which probably matches up quite nicely with the high of today. Okay, not too far away from that as well. So maybe if we come up to here, 13.31, and that high, not a bad place to look to go short, but I'd obviously be keeping an eye on what the dollar and what equities are doing, and depending on the time of the day. Oil, which pushed above 69 this morning or late last night, yeah, just about late last night on the futures. Obviously the high of the Asian session. Let me just get that rectangle up again. Has worked very well on the classic there. We broke through, came back, and have found good support for that push to make a new high. Key level as well to the downside. I'll be marking up these levels of support where we found not long ago and then early this morning on that low of the day. Would be the key areas to focus on. I think if we were to continue, iPhone numbers have just come out. 102.1. The estimated was 102.8. So a bit worse than expected. The previous 103.2 as well. Let's have a quick look over the European markets there. Come back to oil in a sec. Euro, dollar. Not really that interested. If anything, coming under a tiny bit of pressure. The DAX unmoved on that, so bit worse than expected, but still, you know, nicely above the 100 mark there. So just going back to oil, I would prefer the upside. I think we could, as Philippe mentioned yesterday, can we get a test of that $70 handle? It'd be interesting to see. Obviously got API today, DOE tomorrow, but even if they come out bad, it seems like it's an opportunity to sort of buy the dip for this market. I think if we were to get a bit of a sell-off today, the pivot for me looks like a good area of potential support to get in, so something just to bear in mind if we were to get through these areas. I think this could be quite an interesting one. 68.64, previous high of yesterday on the R1 before we broke through. Haven't really had a proper test back of that level, so depending on how aggressive you want to be, there's some good points of support there. Just going back to that DAX, and we'll have a look at the FTSE as well. DAX pushing on, helped by obviously the weaker euro, but key level of resistance just testing. Well, we haven't had a proper test yet of the high from last week. Definitely we'll be keeping an eye on that, what happens around there. We saw yesterday the DAX, which gapped higher, pushed down aggressively before pushing back up, and it has been quite choppy, but we have broken the sort of, well, 1, 2, 4 sort of trading days that were all making new lows. So we've broken out of that. I'll be keeping an eye on this high here for the DAX and Eurostox. It's going to be relatively similar, but that is really sort of pushed on from yesterday as well. Let me just refresh that chart. In terms of looking for these markets to perhaps come down a tiny bit, Euro Stoxx slightly more messy than the DAX in terms of good area support, unless we were to get perhaps a bit lower down and using the pivot area and the lows from yesterday evening. FTSE, which with the pound coming under silly pressure recently, has been boosted. You can have a look here on the longer time frame, overlooking sort of 7 trading days. It's been one directional. Had offered a good opportunity, I think, for those sort of longer term trades. The pound was coming under pressure, equities were rising in the US and Europe, and it was just waiting for the pound to perhaps relax a bit, and then the FTSE could sort of come and join the party. So that has been continuing to push higher. I'd favour the upside here, while the first test on R1 offered quite good level of resistance. I would still be preferring to look to continue this trend to the upside. Pivot, not too bad. The pullback that we had yesterday afternoon, also good level support, or waiting for the high of the day and R1 to break to sort of get back to these levels that we saw as we were coming down on the 2nd of February when it was all kicking off. Any questions, obviously, please do get them in the chat. Equities in the US still near the highs of the day, and pound, if we just have a quick look, not far off still. It's low and just coming down for another look now.